Hi everyone, let's go over my low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Started with my low time frame bearish scenario where we're still looking for a move to the downside in a wave C, where the most common target for wave C is between the two 1.618s, which is between 29.1k and 28.4k. One of the 1.618s is taken from the high to the low of A to the high of B with the trend-based fib extension tool, and the other 1.618 is then taken from the low of wave A to the high of wave B, and then the area in between is the most common target, with the trend-based fib extension 2.618 being a rare target for a wave C. If we open the support areas, you can see that this area has some additional support of one of the blue target boxes that we have between 28.8k and 29.2k, and in between the common target and the more rare target we have this support area as well between 27.8k and 28.2k. Now in this scenario, we are looking for an expanding flat, which is a 3, 3 and then a 5 wave move to the downside, meaning that this move to the downside has to be an impulsive structure. So it has to be short, it has to be quick, it has to be impulsive. This wave B hit the most common target area of a wave B, which is between the 1.236 and the 1.38, pulled from the high to the low of wave A, which is very nice. It hit the 1.236. And then the question is this move to the upside a 3-wave structure? Because in a wave B, you want to see a 3-wave corrective structure. Now we can count like 3 waves here, another 3 waves, and then you have this move over here. The question is, what is this move, right? It looks like an impulsive structure. Can it be a 3-wave structure? It's difficult to count this as a 3-wave structure on the very low time frames, because if I zoom in over here and we go over it in the bullish scenario as well, counting this in 3 waves ain't that easy, right? A potential 1, 2, 3, 4, 5 correction. And then you have another like 3 waves to the upside. Doesn't really work. Maybe this is your end of a 5-wave move. Correction 1, 2, 3, 4, 5, right? But then wave C is very long compared to wave A. So it's not an easy structure to count in 5 waves. Then we also have to think, could this be potentially a wave C of then an A, B, C structure? However, this low over here didn't take the low on the left. And if we're thinking about this to be a wave C, then we have to think about an expanding flat and then an A, B, and then a wave C. But because this low did not take the low on the left, an expanding flat is kind of the cards. You could think about a regular flat, but a regular flat C target is over here and not all the way up there. So it looks more impulsive, but of course then I think for me the move we get to the downside is going to be more important than the move we had to the upside. We took the high over here. We also took one of the highs of 2022 with a swing failure pattern move over here. We now backtested this high of this range that we've been in for a long time with a couple of candles, and we're now moving to the downside, and that move to the downside for me is going to decide either the bullish or the bearish scenario, because as mentioned in my morning video, we were looking for a move to the downside anyway, and this support area over here between 30.5k and 30.7k is going to be very important for both of these scenarios. Now finally, I like to talk about the vertical lines that you see on the chart. And these are fib times taken from the low to the high of the impulsive structure to compare the time it took to develop this impulse with the time it takes to range. And this range is really, really long compared to the impulse and potentially a wave 1, 2, and then a 3 or an A, B, C. The fact that it is this long fits more with a wave B if we come down once more than a wave 2. However, if we do look at a move to the downside, we're probably gonna end this move somewhere between the 2.618 and the wave or the 3 fib time, with the 3 fib time being the 18th of July and the 2.618 is the 15th of July. So, you know, patience is needed to see how price is going to move in the upcoming days, upcoming hours. In the bullish scenario, this is something that crossed my path basically. So a potential triangle in a wave Y. Usually I'm not that big of a fan of triangles because very often they don't respect the rules, and I have a couple of notes that I want to walk you through. But in this scenario, we are then looking for a 3-wave in W, 3-wave in X, and then you have a very long sideways triangle structure where we then have a wave A, B, C, D, and eventually a wave E, where this impulse to the upside is now the beginning of something new. And let's start with the impulse before I go into the triangle, because it's quite important movement was happening over here. If we look at this to potentially be an impulse, we then have a wave 1, 2. One could potentially think all the way up here is a 3, 4, and 5. Wave 4 candles preferably not closing below the 0.5, and as you can see, it's already been hit. 0.5 is taken from the low of 2 to the high of 3. So you don't want to see candles closing below this level, preferably in a wave 4, else it's kind of invalidated for then to continue to the upside in a wave 5. And then the alternative becomes that wave 3 could go over here. Wave 5 is already finished, and this was a wave 4, where we then have a 1, 2, and then another 1, 2, 3, 4, 5, 4, 5, where the highest volume is in wave 3 of 3, which is this one over here. And you can see that this wave 5, compared then with wave 3, has a lower volume as well, which is what you want to see in an impulsive structure. For this then to be a potential wave 2 and then continuation to the upside in a wave 3. Currently price is bouncing on the 886. So yes, it hit the 05, moved to the upside over here, had a correction, currently on top of the 886. There's some bullish CVD divergences that I go over in a second. But the 886 is usually not a target for a wave 2. It's a rare target for a wave 2, and it is a common target for a wave B or a wave X. And the fact that we now twice hit the 886, it gives probability more to, if we get a move to the upside, that it is a corrective structure, this whole thing, compared to this being another wave 1, 2, and continuation in potentially a wave 5 or just continuation in general, right? That's what the 886 is telling us. If we then go to the triangle and go through the different notes that I wrote, then first of all, wave B is a little bit odd. So I had a good look at this triangle. Can this be a zigzag? Yeah, like, okay, first of all, a triangle, 4 out of 5 waves need to be a zigzag structure. If one wave is not a zigzag, it's usually a wave C or it is wave D. And also you want to see volume declining in a triangle till the end, where you then expect another impulsive structure. Those are some of the rules that are most important. If we look at this wave A, can this be a zigzag? Yeah, you can force a zigzag in there. Wave C, of course, is incredibly long over here compared to wave A, but okay, we can do that, right? This wave B is a little bit weird. This could be a wave A, then you have a very weird wave B and a wave C. And the reason this is quite weird is because you'll be looking at either WXY or an ABC expanding flat. And if we would think this is then a wave A, B, and a wave C, if we pull out the target, it works from the low of A to the high of A to the low of B. Most common target here between the 1 to 1 and the 1.236. B ended there, perfect, right? Absolutely fine. But this structure, and then the blue wave B, which is this, is a little bit odd. If you take a fib from the high of A to the low of A, and you toggle on a expanding flat target, for example, then over here, the high was made above the 1.618. It's at the 2 fib, which is incredibly rare for any like structure, wave B, expanding flat, or a wave X. And also, this low over here did not take this low in potentially an expanding flat ABC, where C most commonly takes the low of A, else it's a running flat, which is incredibly rare. So this has to then be a WXY scenario for this then to be another zigzag. It's just an odd structure. I'm just talking you through my thoughts. I hope you appreciate it. It might make it more complicated than you're looking for, but I try to help you understand what I'm looking for and why, you know, I write these notes as well. So if we then look at wave C over here, then this, could it be a zigzag? It's a very, very sharp zigzag, right? We were looking at this previously, like when price was ranging, at this to be an impulse in a regular flat, which then is an ABC. However, a flat is not allowed in a triangle. In triangles, you only want to see zigzags. And if we look at complex structures in a C or a D, you're talking about double zigzags, triple zigzags. Like those are the things you're preferably going to be looking for. And flats are following the rules not allowed, or one could say incredibly uncommon, but you know, not allowed. So therefore this is then the high of B, and this has to be a zigzag, but this looks by itself like an impulsive structure instead of a zigzag, unless on the lower time frames this is like a 1 2 3 4 5, I mean, you come, or 1 2 3 4 5, that's A, B, and then a very, very shallow C. But if we then take the target from the high of A to the low of A to the high of that potential wave B, toggle on the C targets, you can see that the 0.618 hasn't even been hit over here, which is already a rare target for a wave C. So that's very interesting as well. Then if we look at wave E, then you can see that over here, this wave E, considering the volume, had quite a lot of volume moving to the downside. Of course, that's all the way at the end of a triangle, so I could say, okay, it's acceptable. Over here, wave A has a high amount of volume. This wave B high had less volume than wave C. Again, volume going down, that's fine. This wave D volume over here had at least less than wave B. But then wave E like jumps out with this amount of volume a little bit. So, something to think about. And if we think about wave E, then it has to be a zigzag in a 535. But this low over here, this one, did not take the low on the left. And also on other charts, I checked, this low did not take the low on the left. And that's interesting because in a zigzag, you're looking for a 535 where wave C takes the low of A. Not taking the low of A is incredibly rare. Both of these candles on my chart are exactly to the comma at $30,200 per Bitcoin, right? While on other charts, this low over here is higher. It's not even close to this low. So that is very, very rare for then this push to the upside. So there's a couple of things that I don't really like about this triangle that hopefully I explained to you, which, in general, this structure, very, very weird to count. From here, an impulse to the upside in a 1, 2, 3, 4, 5 just doesn't work. So this triangle might then be a potential solution. But then again, how price is going to come down is going to decide everything for me. If we then finally go to the CVD, the news and the probabilities, then CVD wise, we do have a bullish CVD divergences. So price moving up and down, creating a bullish CVD divergences, higher low in price, lower low on the CVD, where the target is going to be this high over here. But while price was moving to the downside before it created bullish CVD divergences, at the highs over here it created bearish CVD divergences, lower high on price, higher high on the CVD, and also locally over here. So on price, lower high, higher high, that's bearish, higher low. But on blue, lower low, as well as on yellow, by the way. So higher low on price, lower low on the CVDs, which is bullish. And then on the 5 minute, and this already played, all the bearish ones already played out. The bullish ones didn't. But then very, very locally over here, you had a lower high on price, but a higher high on the CVD. So from these green candles, lower high, higher high, bearish CVD. So the bullish CVD didn't yet play out. The bearish ones have already played out, as the target is the horizontal line, and you can see price now wick below, hitting the 886 fib, remember, for the second time, and then potentially moving towards the upside, knowing that the 886 is a common target for a B or a wave X. If we finally check the news, then of course we already had a lot of news this week, but we do have G20 meetings over here, day 1 and day 2. Don't know, maybe it will do something. That is the question. And then finally, the probabilities. Well, as mentioned, I'm actually quite neutral because for me, it all depends on how price is moving to the downside, because in the bearish scenario we want to see price moving to the downside in an impulsive structure. So volume is going up and then a 1, 2, 3, 4, 5, right, where you expect a 5 wave move to the downside, meaning that this potential wave 1 by itself needs a 5 wave structure, right? If price is very much ranging towards the downside, that fits better with the potential bullish scenario where you then expect continuation. And for me, this support area over here is going to play an important role. Of course, we don't know if price is going to hit it, but I like to give price more time in order to determine the probabilities of the bullish versus the bearish scenario. And this is also Elliott Waves. In this case, it's neutral because we're waiting for more price action to see and develop a thought about what is most likely. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.